Welcome everyone to Vested Interest. This is Shane back again for another weekly portfolio update. We do these every Sunday morning at 7:30 a.m. Before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. And for those of you who may be stopping by for the first time, on this channel we focused on dividend growth investing, buying stocks in good companies that pay growing dividends and hold them for the long term. It's not rocket science. In my opinion, the best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, whether that's weekly, bi-weekly, monthly, quarterly, whatever you can do, dollar cost averaging in a dividend growth stocks and growing companies with positive cash flow that more than covers the dividend and a high return on their invested capital. I cover all my investments and activity in the portfolio on this channel. I do not have a paid Patreon account, a paid paywall to access any other sites to go to, or any of the courses other YouTubers try to charge you for. It's free to see what I'm doing on this site. We all have enough to pay for, so it's all out in the open. I want you to be able to see a real portfolio built out over time, the ups and the downs associated with that. But if you would like to help the channel, take a second to hit that thumbs up if you find value in the content. Click the subscribe button and make sure the notification bell is turned on so you get notified whenever any new videos are posted. Join us on this journey to financial freedom. Join the Vested Interest community and drop a comment below. Let me know what you invested in this week. Are you in any options? How did you do in options this week? If you are, did you get paid out any dividends? We did add a little over $1,400 to the portfolio, so let's jump right in and see what we picked up with those new funds and anything else that was going on this week. First up, finally, we got some options to hit this week. We actually threw out several covered calls or attempts at covered calls this week. One hit, we got the sold to open one contract of Pfizer, ticker PFE, with a strike price of $28.50. This was a covered call, so we already owned 100 shares for that. Being willing to sell at $28.50, we received $16.45 in options premium. So that went right back into the portfolio. It expired on Friday, right? That was the end date, January 26th. We opened the covered call or sold the covered call on January 22nd. One contract, which is 100 shares, $28.50 strike price, with a date of January 26th for expiration. It did expire worthless, so we received, which basically means the 100 shares stay in my portfolio. We also received the $16.45. That's like another dividend paid out by Pfizer, even though it is options premium. So that is the intent with running options. We are trying to create some additional income over the year to dump back into the portfolio. First one of the year at that. First call that was actually hit for 2024. So, and on January 24th, the first dividends of the week rolled in. We did get $71.88 from Cisco Systems. And we have the drip set on, so that means anytime a company in the portfolio pays out dividends, in this case $71.88, it goes right back in and buys more shares of that company. So that $71.88 bought 1.38661 more shares, and those additional shares added another $2.16 in passive income over the next calendar year. And we weren't done. We received more dividends on January 26th from Cisco Corp, ticker SYY. And Cisco Systems on the previous page was out of the information technology sector. This one is out of the consumer staple sector. And Cisco paid us $50, and that $50, same thing, the drip is set on with all the positions, and it went right back in and picked up 0.66454 more shares of Cisco, which added an additional $1.32 over the next calendar year. Now to the first new capital added to the portfolio on January 25th, we went in and added $1,095.69 into the portfolio. With those funds, we bought 4 shares of Nutrien, ticker NTR. This is a Canadian company out of the materials sector, so there are some tax implications around this one. This one has really pulled back, so I'm going to nibble on this one a little bit, probably 2 to 4 shares a week here over the next several weeks, bring down this cost basis a little bit, bring up my potential future returns and that dividend yield. We bought those shares at $51.15. We added to our CVS Health Corporation, ticker CVS, out of the healthcare sector. This one's pulling back again. I would love it to drop back into the 60 range and add a little bit more here. We picked up those shares at $72.28. And the newest position in the portfolio, besides the ETFs that we added recently in 2024, 10 more shares of Alibaba Group, ticker BABA. Now, this is a Chinese company. It's out of the consumer discretionary sector. We picked up those shares at $74.66. This one really jumped up this week. I'd love this one to drop back. Our cost basis is $72, and I was buying it last week in the 60s, $68 and some change, I believe. I wish it would drop back. There was some news about the company founder and the CEO of the company buying a lot of shares. So obviously they think they're undervalued. I agree with them. That's why I'm adding to it. And I'm going to continue to add to this one so long as it stays under $80. And really, even if it goes a little over 80, so long as my cost basis stays under 80, I want to get this built out to 100, maybe 120 shares, and then I'll back off a little bit and maybe look to add another position, a couple of other positions that I'm looking at. Now, these new shares added with this $1,095.69 added an additional $22.80 in additional passive income over the next calendar year. And we weren't quite done, and I don't know why the date's so wrong here, but January 26th, we added another $319.54. And with those funds, we did our weekly ETF buys. We added one more share of Schwab's fund, ticker SCHD. This is a dividend ETF, dividend growth ETF here. And we picked up this one at $77 per share. Another one that's starting to run up. I was buying this last year for my daughters in the 60s range, and then last week I think we even got it down in the high 75 range, and it just seems to keep going up every week. But this is a weekly buy, so regardless of what the price is, we're going to add at least one share, and if it was to drop back significantly, we might add a little bit more, but overall, every week, one share of SCHD. And our other weekly buy is going to be Vanguard's Total Stock Market ETF, ticker VTI, and that's exactly what it is. It is the entire United States stock market. Anything on the New York Stock Exchange is in VTI. One more share at $242.54. These new shares added an additional $600, I wish it was 600, an additional $6.97 in passive income over the next calendar year. All total, we added $1,415.23 to the portfolio, and added with the dividends paid out and the new funds that we added and the dividends reinvested back into the portfolio, added an additional $33.25 in passive income over the next calendar year. Let's take a look at the overall portfolio breakdown. Communications is sitting at 9.46% of the portfolio. Consumer discretionary makes up 3.17%. Consumer staples sitting at 11.82%. Energy makes up 6.44% of the portfolio. Financial sitting at 8.46%. Healthcare is the largest piece of the pie here at 16.82%. Industrials at 7.79%. Technology makes up 7.81% of the pie here. Materials at 12.04%. They are in second place. Utilities sitting at 4.67%. This is one of the areas I'm looking to add potentially a couple positions or maybe just one over the next month. If you haven't caught my 4 stocks to buy, 2 ETFs to buy for February, check that video out. It did post on Saturday, which will be yesterday. You're going to see this on Sunday morning. And REITs and real estate, 10.9% of the portfolio. Lastly, the most recent ETF we added here, I consider my overall portfolio my own ETF that I'm building out. But if you look at a lot of the big guys out there, Warren Buffett, Ray Dalio, a lot of the others do have some ETFs in their portfolio as well. And for those of you who do not want to do the research into individual stocks, ETFs are an easy, just dump money into them, set it and forget it, way to invest where you don't have to do a lot of research. And the two that I'm investing in, SCHD and VTI, VU would be another one. There are others out there. VUG would be another one. And if you want something in the information technology sector, if I was going to set up a brand new portfolio, I would probably set up a portfolio, all ETFs, and pick one in each sector. And probably an emerging market ETF as well, foreign market ETF, and then I would rotate through the sectors and dump money into whichever ETF had pulled back that particular week or that particular month or quarter whenever I was investing. But over here so I do have a couple ETFs in the portfolio, and over here on the right, this is the portfolio sector weight breakdown. You can see the percentages here in this column. You probably can't see it. You can see the percentages here in this column, and then here is the dollar amount allocated to each position as well. Now let's take a look at the overall portfolio that you've probably came here to see. We have all of our tickers over here on the far left. How many shares of each position that we have here, current price as of the close of business on Friday, the market value as of the close of business on Friday. All of these prices are updated as of the close of business on Friday. Average share price, that's my cost per share in this column. Purchase price right here, how much I have in each position. What you saw on the previous page was per sector. This is broken down by each position. How much I'm up or down, you're going to find in this column. Percent return, obviously in the green, means I'm up. In the red means I'm down. The greener it is, the more up I am. Ally up 47.55%, HVT up 22%, Union Pacific up 22%. Williams and Sonoma only have 2 shares. Wish I'd have bought more of this, but up 71.96%. So I'm up on quite a few positions. Down on some, really down on MPW, down 58.9. My biggest loser by far, MPW. So right now I'm just letting the dividends reinvest and trying to bring down that cost basis and bridge this gap a little bit. What sector the companies fall in here, whether they're a quarterly, monthly, or semi-annual or annual. I put BABA is only paying out once a year right now, so I put it in a semi-annual column rather than making its own once a year column. That's where it's going to stay. I'm hoping that they increase the payouts to semi-annually or even quarterly at some point, but right now they just started paying dividends here in January, and it's just once a year. The current dividend yield, my yield on cost, portfolio weighting. So what we saw on the previous slide, you could see the sector weightings. This is by each individual position. And I have a rule that I don't want any one position to be over 10% of the portfolio or any one sector to be over 20%. So Johnson & Johnson here, it's down right now. I'm probably going to add a little bit more if it stays down under my cost basis next week. I might throw in 1 or 2 more shares here, but it's getting close at 8.46% of my portfolio. I'm going to have to really start watching this one again. I don't want any one position to be over 10% and really want to give it a little bit of room to where if it was to rebound, it wouldn't jump up over 10%. But I'm going to add to it if it's down next week. I think it's just a little under my cost basis, and I just am running out of positions that are under my cost basis, so it would be one that I want to add to. Enbridge is another one. Ticker O here, down significantly. I probably am going to add, well, I'm not probably, I'm going to add to O next week as long as it's under my cost basis as well. And then continue to build out BABA, and then my weekly buys VTI and SCHD. Estimated annual income in this column, payout months here, percent dividend growth year over year, and where it sits at 15% of its 52-week low. So I use this as kind of a gauge where I don't want my cost basis, right, my average cost per share, to be over 15% of its 52-week low. So I use this as a way to keep my average share cost. I can buy potentially if it's over 15% of its 52-week low, so long as it doesn't bring my cost basis up. And we can look at BABA, for example. BABA, I can buy up to $80.59. So it's not, even though it's currently at $74.03, over my cost basis is $72.07, I will continue to buy this up to $80.59 so long as my cost basis stays under this $80, 15% of 52-week low, which is $80.59. So that is the idea there behind that. I just don't want this cost basis to be over where it sits at 15% of its 52-week low. So I will continue to buy even though the current share price is over my cost basis. So it will basically be bringing my cost basis up in this case, well, if it stays above 72.07. So let's run through the totals here. Sitting on 5,918.497 shares total. Current market value sitting at $206,343.89. I have $202,246.12 into the portfolio. I am up $4,097.77, up 2.03%. Current yield sitting at 4.532. My yield on cost 4.624, and this is what I really focus on. I'm not focused on over here whether I'm up or down. I'm not focused on how much I'm up or down. I am, if you've been watching the channel, you've seen me down, 5, 6, 7%, and you've seen me up 5, 6, 7%. Right now up 2.03%. The market goes up, the market goes down, the market floats sideways at time. And I focus on this, the estimated annual income from the dividends paid out from all the positions in the portfolio, sitting at $9,350.91. This continues to go up week over week, month over month, quarter over quarter, year over year, and eventually this will be what I live on and sustain myself whenever I walk away from my day job. That is what it's all about. Eventually replacing my weekly, semi-annual, or semi-weekly, or bi-weekly. I'm sorry, I don't know why that was so hard to say. Bi-weekly pay or weekly pay, depending on how I want to distribute it out. Well, that is it for this one. As always, appreciate you stopping by. Excuse me for being so tongue-tied this morning. It's late in the afternoon. I am a little tired from the week of work. Probably going to go relax the rest of the day. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, hit that subscribe button down below. Help us grow this channel. Help us get the word out that dividend growth investing is the best type of investing, in my opinion. Hit that notification bell as well so you're notified whenever we put out any new content. Join us here on this journey to financial freedom. Join the vested interest community. Hopefully you are on your own investing journey as well, and I do hope that it is going great for you. Let me know how you're doing down below. A lot of green in the markets right now. Is your portfolio running up? Any positions you're looking to sell and take profits on? What positions are you looking to buy over the next week and the next month? Drop it all down below in the comment section. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. I do a stock pick of the day series Monday through Thursday. So if there's a company you'd like me to do a review on, put it down below. I'll put it on my list and I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great weekend, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risky cannabis money. You should never invest any amount in a company. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice of a certified financial advisor.